What is depository? A depository is a type of account opened by the investor through the depository participant to deposit their share certificates in the electronic form. This depository system aims at replacing the manual system of share transfer, settlement of transactions, and physical delivery of shares by a method of simple book entries. The system is helpful to reduce the total time taken to complete a transaction and ensures greater liquidity. And it is also defined as a facility for holding securities either in certified or uncertified form to enable book entry transfer of securities. Depository is a place where securities are stored, recorded in the books on behalf of its investor. In the current scenario, the volume of securities and the size of business handled have increased manifold. Hence, the present day depositories are fully automated to serve the investors faster and with accuracy. Therefore, a depository can be defined as an institution which transfers the ownership of securities in electronic mode on behalf of its members. There are some objectives of a depositories. Uh, it helps the investor to reduce the time for transfer of securities. It also helps to avoid risk of settlement of securities. It helps to enhance the liquidity and efficiency. It helps to reduce cost of transactions for the investor as it is fully automated. It creates a system for the central handling of all securities. It promotes the country's competitiveness by complying with global standards as all transactions are done in online mode, and it helps to invite the foreign investors. It aims to provide service infrastructure in the capital market. There are some activities of the depositories. It accepts deposits from the investors and act as a custodian for the securities. It makes computerized book entry delivery of securities which are immobilized in its custody. It creating computerized book entry pledges of securities in its custody. It undertakes actions like distribution of dividend and interest as a depository act as a medium between the investors and the company directly deliver the dividend and interest to the investors. The securities can be redeemed on a maturity date. Depository processes. There are two types of processes, which is immobilization and withdrawal of shares. Of shares. Immobilization of shares is the first step in the depository process. In the depository process, the share certificates are submitted to the depository, which converts the physical certificates into electronic data and starts issuing statement of accounts for the holding of the investor or the shareholders. There are some steps followed to convert the existing paper certificates into an electronic mode. The stock exchange will notify through the advertisement. After then, the investor can deposit the share certificates in the central depositories with the help of the depository participant. On receipt of the share certificate, the depository agent sends the certificate to the registrar and the transfer agent for registering depository nominee name. Within a prescribed period, the registrar will transfer the scrips after confirming that the shares are good for disposition in the names of the depository nominee. The depository will credit the account of investors with the number of shares deposited. The shares which are held in the withdrawal of shares, the shares which are held in the depository can be withdrawn by the investor. Depository process in India. There are four constituents in the system. One is the depositor, and the one is depository participant, the beneficiary owner, and the issuer. The depositor. The depositor is entrusted with the securities for effecting the transfer of ownership of the securities. He acts as a custodian for his client's security. The depository has no right over the securities except transfer of it. Next, the depository participant. The depository participant is the link between the depositor and the owner of the securities. He is deemed as an agent of the depositor. There are some eligibility to become a depository participant. The clearing house of the recognized stock exchange, non-banking financial companies with minimum networks, banking including foreign banks can be act as a depository participant. Beneficiary owner are the investors, and they are the real owner of the securities. He or she has a right and liability associated with the securities. Next, the issuer. The issuer is the company which issues the securities, and the issuer company gives the choice to the investor to hold the securities in electronic form or in a physical form. If a investor likes to hold the securities in electronic form, he can open an account with the help of the depository participant by requesting the dematerialized request form. This dematerialized request form helps to convert the physical shares into an electronic mode. And if a investor chooses to hold physical form of securities, he can request the depository participant the rematerialized form request, and the securities can be rather transferred to the physical mode from the electronic mode. Benefits of depository system. The depository system gives benefits to the investors, companies, and capital market. Benefits to investors are it helps eliminate the paperwork. The cost of transfer is less when compared to physical mode, and there is no stamp duty in share certificates. It helps to reduce the risk of bad deliveries, fraud or misplacement, or lost share certificate will not exist. As it is done in electronic mode, it shortens the settlement time, and the dividend or interest transfer to the investors can be in a speedier, as the ownership can be easily identifiable. It helps in faster payment in case of sale of shares. Benefits to the company. It helps the company to identify the number of investors who holds his company shares. The company can easily transfer the dividend or interest or bonus without any time delay. The company can easily maintain the books of accounts. As all transactions are done in an electronic mode, there will be an evidence to prove the transactions. Next, the benefits to the capital market are it helps to bring confidence to the investor to buy shares in the capital market. It attracts more number of middle income group. It helps in attracting the foreign investors as well. National Security Depository Limited. The depository system has two heads. One is an NSDL, another one is an CDSL. The NSDL is first depository in India, and it was established in the year 1996. It has been promoted by the Industrial Development Bank of India, Union Trust of India, and National Stock Exchange. The NSDL performs wide range of securities related functions through the depository participant. It maintenance of individual investors' beneficiary holdings in an electronic mode. The NSDL will maintain the securities on behalf of the investor. It helps to dematerialize the share certificate and as well rematerialize the securities. It allots the allotment can be done in electronic mode in case of the initial public offering. The distribution of non-cash corporation actions can be done through the depository participant. The depository participant will deliver the non-cash corporations like transfer of rights, transfer of bonus issues to the investor by the company. It also gives facility to freeze or lock the depository account, that means demat account of the investor. For freezing or unfreezing the account, the investor can get help with the depository participant by requesting the KYC forms. The freezing can be done for the personal reasons or for the KYC reasons. Next, the facility for pledge and hypothecation of securities. If an investor needs any amount, the investor can pledge their securities with the NSDL and can get the amount that the investors needs. It is same as an hypothecation. There is some difference between the pledge and the hypothecation. Pledge, the ownership will be transferred, and in hypothecation the ownership will not be transferred. These Depositories and Participants Relations Act 1996. The SEBI gives some regulations for the depositories and its participant. There are some features in this act. Depository institution. The depository institution provides for creation of one or more depository institutions registered under the Companies Act. The SEBI has proposed that the minimum net worth of a depository should be a rupees 100 crore. Next, the depository participant. The depository participant are persons dealing directly with the depository for their clients. The depository is a crucial link between the investor and the depositor. The following entities could be permitted to be the registered depository participants, namely the commercial bank, financial institutions, stock exchanges, financial services company owned to extent of 75% by any of the above mentioned institutions, as well as companies registered abroad providing custodian in the security market and approved by the central government. Next is investor's choice. The investor is given the option between holding physical securities at present and having depository-based ownership records. If an investor choose to hold securities in electronic form, they can hold. If they choose to hold the securities in physical form, they can choose to hold it in physical form. Next one is free transferability. The act helps made free transferability of shares. The company's right to use their discretion in effecting transfer of securities by deleting the section 22A from the Securities Contract Regulations Act. In SEBI regulations, the certificates can be easily transferred from one person to the another. If an investor chooses to transfer his securities, he can freely transfer to another person without any delay or without any restrictions. Right to the transferee. The transferee of a security will be entitled all the rights, including the voting rights associated with the securities. However, the transferee in such case will continue to enjoy the economic rights like bonus, right issue, dividend attached to the securities. Next one is fungibility. Fungibility. It is a type of barter system. If a person likes to transfer his shares to the another person, the same value of amount can be transferred to the other party, and other party can transfer the same value of securities to the another party. Next one is no stamp duty. As it is done in all electronic mode, it helps to eliminate the stamp duty, as the stamp duty cost will be high in the form of physical mode, and this is done all in an electronic mode, so it reduces and there is no stamp duty the share certificate has. Next one is on depository records as legal evidence. As all the transactions are done in electronic mode, there will be a transaction history and it acts as a legal evidence on cause of any court actions. Next one is pledge or hypothecation. The SEBI regulated if an investor likes to pledge or hypothecation, they can pledge their securities or hypothecate their securities if the investors are in need of money. Thank you.